Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday. It's the 7th of October 2016, and let's take a look at these numbers for the week. The S&P lost a little bit of ground, as did the Nasdaq and the Russell. The Biotechs kind of fell back apart. They're still down, 16% year to date, but the semiconductors are at new highs and increased their year to date gains to over 30% now, and oil had a good week as well, while the bonds sold off. So let's take a look at the numbers, or the charts rather, and take a look. The S&P 500, what I'll do is start out with this chart. What we see here is we've got a 50, that's this line right here. This is a 50-day moving average. Here's the 100-day moving average, and this purple line is the volume weighted average price since Brexit. So what we're seeing now is that this market is kind of coiled between the 50 and the 100-day moving average, and also finding support at the volume weighted average price since Brexit, and that's an important level. If you recall that from the January year-to-date volume weighted average price, Brexit did find support at the year-to-date volume weighted average price at that point. So looking at the shorter term time frame, we'll start here with a 30-minute chart, and you can see that we've kind of just been still in this mess. Really not much happened this week. We're up slightly, or I guess we were down slightly, but nothing has really changed. No damage done with that short-term sell-off. We were kind of stuck between what's been, this was kind of the midpoint of the resistance and where that 50-day moving average is, and now down here by this 214 level seems to be the more important area of support, 213.75 to 214. Next week we're going to want to see that hold. If it fails to do so, then it kind of puts a little bit of puts this market in jeopardy a little bit further. I think breaking that level, that we could see a deeper pullback. But for now, we're still looking at this as a consolidation that possibly is bringing in shorts, but it's building energy for something. That's clear. What we know is that the prior resistance from 2015 has so far acted as support as this market broke out and pulled back. So, the longer term trend, we've got a rising 100, 150, and 200-day moving average. That tells me that to be generally optimistic, but be prepared that if this market does break down and hold below 213.75-ish, that we could be that you should be prepared to become a little bit more defensive. The Nasdaq continues to hold up in this range here, so really not much has happened here in the Nasdaq either. If we take a look at a 30-minute time frame, we see that this prior little area of resistance has been acting as support. But what these circles indicate are these higher lows. First we had the low at 117.25, then 117.50-ish, 117.75, and then 118. So we're seeing higher lows, but the market's just not going anywhere within this range. Obviously, to continue the uptrend and be considered the intermediate term back in an uptrend, we'd have to get back above the highs that we've seen this year. Breaking below and holding below 117.5 would give us a little bit of reason for intermediate term concern. We've got this, this represents the essence of trend, this trend line here, and be careful, so if we were to break the trend line and support, that might motivate a little bit further selling. So, perhaps a test of the 50-day moving average. But for now, it's just a sideways consolidation within a primary uptrend. And those typically resolve themselves in the direction of the primary trend, which, of course, is higher. The Russell 2000 had a little bit more trouble this week in that, we've seen the recent band of resistance up here between 124.50 and 124.80, and the band of support being down near 122.50 to 123. We broke below that, and now we came back into it here late in the day to save it, but we are below a declining 5-day moving average, and that tells us we have to be very cautious heading into next week. If the Russell cannot recover and hold back above 123 pretty quickly, then it does open the door for perhaps a deeper sell-off as it breaks below that 50-day moving average. Now, the 50-day moving moving average is rising. So I would expect it still to be just a pullback, but we have to treat each pullback cautiously. You never know if it's going to be the beginning of something more significant. Certainly, the semiconductors are showing that their resilience again up over 30% year to date. I can't tell you how many emails and comments I get from people saying that they're overdone and they were the short of the century. But all I see is an uptrend, higher highs and higher lows. I see that we're holding above the rising 5-day moving average, above key volume weighted average price levels that you can draw in from various areas, and prior band of resistance has held as support. So I think that being bearish doesn't make any sense on the semiconductors. We've got this trend line, again, best representing the essence of trend. Would use these lows right in here, and perhaps coming back down towards 68 would signify something that perhaps we're due for a deeper pullback. But right now there is zero evidence that this market is ready to pull back. It's consolidating through time, and today it closed at a new high for the year. So tough to be bearish on something that's making new highs. The biotechs, we continue to see that biotechs are one of the riskiest groups out there. You look at this Analy Pharmaceutical this week, and on Thursday it got the crap kicked out of it and continued lower on Friday. These things typically don't bounce very well when they, the biotechs. And here's a stock that is continuing just to get hammered here in the biotech group, and the biotechs in general don't look as bad, obviously, as that. But we did find resistance this week at this prior band of support. We got above the 5-day moving average. But as I always say, you don't trust the rallies when we have the direction of the 5-day moving average lower. What we were looking for in alpha trends this week as a potential for a bullish reversal in here was for something like this to happen, come back up, and then get going. And that 5-day moving average would have signaled, a higher high right over here. Obviously, that didn't occur, so there was no reason to play guessing games and try to buy the market. Instead, it continues to deteriorate here, and looks like it's probably headed for another test down near this, 278 to 280 level. Shares of Apple, really not much happening in here this week, although they did improve somewhat because, we still remain above the volume weighted average price from this low back here. That's this purple line, and we're showing some higher lows in this stock as well, but we've got a band of resistance. So breaking back above maybe 115 next week would lead to further upside continuation, and I would think that for an intermediate term trader, or worst case stop would go somewhere down near 113 and a quarter if that were to happen. Bonds, they did what they're supposed to do. Basically, they had a declining 50-day moving average. They rallied up to a prior band of support. That support we're looking at as a potential for resistance. And then, this is what I had drawn in last Friday, and, it kind of played out that it rallied a little bit on Monday, pulled back, broke support, and now it's lower highs and lower lows below a declining 5-day moving average. And it's also got a declining 50-day moving average. So backing it up just a little bit, we're down to the 200-day moving average at this point, and you can see that that's also approximately the year-to-date volume-weighted average price, which makes sense because we are now 194 days into the year, and I think it was 194. So, the 200-day moving average is likely to be found near the year-to-date volume-weighted average price, but I would think that, just because of the significance of this level as far as prior resistance and then the 200-day moving average and that volume-weighted average price, I would expect that next week the bonds probably start to settle down in this area a little bit today and find some support there. That is some nice trades in alpha trends. I posted on Wednesday some of the ideas that we were looking to get involved, and that included this AVXS right here, and we got stopped out of the final piece actually at that point. Came back nicely today, but we didn't have to watch it deteriorate like that. We also got stopped out of Ambarella. We first entered here, and our last piece was stopped out at this point. We got stopped into global and out of it over here, which avoided a loss. So again, it's about money management, risk management. I'd mentioned in last Friday's video the MANH as a short sale candidate below this level. We took a third of it off here, we took a third off here, and got stopped out of the final piece right here at 56.50, which is good because that, again, it's about not just getting involved, but where you get involved, where your stops go, and how you manage the trade as it continues to set up. So, a couple ideas that I've got my eye on for next week include Expedia, which Expedia is looking like it's consolidating up near the top end of this band of resistance, might have the potential to get going. I would say examine that on shorter term time frames, see if it makes sense for you, and know where to set your stop. That's something I help subscribers with each and every day in Alpha Trends. And Best Buy also, broke beyond the volume weighted average price since this recent gap higher and had a bullish day today. This looks like it has the potential to be able to continue to move higher. GLNG, here's one that a weekly chart, you've got a decent short position in it. It's got the potential maybe that it's going to get going here. We've got a rising 10, 20, 30, 40 week moving average. So in that daily time frame, I think the ideal scenario would be maybe a little bit of a pullback or sideways consolidation through time, and then to buy it above this week's high. Anyways, I hope you had a good week of trading, and if you're in the southeast coast of the United States, hope stay safe, and hopefully your house remains bolted to the foundation.